Let's talk to Patrick Reid. He's the co-founder of Adamis Principle. Very good morning to you, young Patrick.
Hi, Nick. Anyone that
Right.
calls me young is my favourite.
There you go. Right, 3 slides. Let's kick off with the first one. JP and the Fed on Wednesday. So rates are going up again tonight.
Yeah, it's pretty much a slam dunk. But the key thing here, talking about, a dovish hike or December or the rate path next year. So for me, the key thing, and it's something that Goldman's picked up, the key thing is the stance of monetary policy. This is a statement from 2 months ago. The stance of monetary policy remains accommodative, therefore supporting strong labour market conditions and a sustained return to 2% inflation. If accommodative gets removed, then that's going to move the dollar. That's going to be dovish. So therefore, it's a sell on the dollar. The other thing is this. There's a lot of talk about neutral around March, and there's numbers flying around. Goldman's is basically saying it should be higher than 2.75. So that would give a little bit more room for a potential pause. You could probably get a lift on the dollar. At the moment, I just think the current stats are if you look at the OIS curve, the Fed funds, the current stats are 92% for September hike, pretty much a slam dunk. 80% for December. That's pretty still strong. That's not bad. And 3 25 basis point hikes next year.
Well, everything I read suggests that we're full steam ahead for further interest rate hikes, and with wages picking up to, I think, 9-year highs, you guess that the Fed has no choice. Okay, let's take a look at the 2 slides you've sent. The dollar yen, a weekly chart. This is pretty dull around these levels, isn't it?
Really dull. And, it's a very tricky beast to trade on the Fed, because obviously if it's hawkish, you get a dollar yen lift, but then you'll sell off, because if it's hawkish, equities will drag it down. So not a bad place to fade. And, we've had this level before, 113.20 area. I fancy fading into the 113.20 40s, whatever happens, unless they drop a bombshell, which is 50 basis points. Let's be clear, that's not going to happen.
Okay, so let's move on now to the euro against the US dollar on a daily chart. I've had a number of technicians come on suggest that this is a bullish chart formation, an inverse head and shoulders, which is a reversal chart. So are you thinking the same things?
Yeah, I'm in a tug of war here, because look, 20s and 50s are kind of holding, and below that it's basically really bearish, but we are holding above. We're closing above on the daily, which is all lovely, absolutely fine. The only minor resistance is 118.50, but it's a 50-50 tonight on the messaging the Fed will give.
Yeah.
It's a slam dunk on the hike, and we all know if the Fed means business, and JP is quite a pragmatic, straight talking kind of guy, this could easily hit 115 again.
Right. But what are the technicals? What are your gut? How are you trading this number?
Okay, I'm buying into 20s.
Yeah.
So if it, I'm wrong below 10s, I'd take some off at 118.50. But I have to say I am quite bullish purely on technical reasons. But I would prefer to sit out the Fed on Wednesday tonight and go back to the technical bullish picture tomorrow.
Understood. Right, on that note, Patrick, we'll talk to you next week. That's Patrick Reid, co-founder of Adamis Principle. Thank you.
Thank you, Nick.